Hey guys, I just wanted to make a little video here showing you guys a simple way that I make money on stocks using the power of 1% to bring me $1,000 a day, sometimes more, sometimes less. But I just follow one simple principle: abnormal trends towards normal. Um, so if you want to know what I'm doing and how you can do it yourself, I'm going to go through that in this video, and we're going to go over the tools you'll need, what we do, how do we know what isn't or isn't normal, and the path to making $1,000 a day and beyond. First of all, just go a little quick disclaimer. Guys, I'm not a professional. This video doesn't constitute any legal financial advice. This is just my opinion. Trading stocks is always a gamble. You should know that. Any trades you make are at your own risk. I just read today that somewhere between like 95 to 99% of people who start pattern day trading eventually wash out by the first year. So this is risky. This is not for everyone. This is a strategy that will take quick thinking and quick fingers. And also just show anybody else, hey, I'm not going to be using professional terms. I'm just a factory worker. Which, on the side note, is kind of the point of why I'm making this video. I just want to show people that, like, you don't need a formal education to make money on the stock market. You just need a method and you need some discipline. So what are the tools you'll need? First and foremost, you got to get a Robinhood account. Get the Robinhood app or go on their website. I use their website, but Robinhood is the best thing for beginners. This video, in my opinion, should be for beginners, but really for anybody. But the point is, Robinhood just holds your hand right away. Like 90 times out of 10, I don't know the company I'm trading the stocks with, and Robinhood will just hold my hand the whole way, like who these people are, what they do, what's going on. Next thing you need is you need a broker. I use E-Trade. Most of the other people I know use Fidelity. Either one of those is fine. Do your own research. Find the one that works for you. Maybe there's one that's linked to your bank. And but don't use Robinhood. Well, at the time of this recording, Robinhood is pretty notorious for being somewhat of a bad broker. I've heard of things like they'll get you your purchase at the right price but the wrong time, or at the wrong time at the right price, and that's just something you just really can't deal with. And maybe they're going to get better later on, but right now the new kids on the block, so they just have a lot to overcome before they become a better broker. Next thing you're going to need is a boatload of cash, and we're going to talk about that. But yes, you do need money to make money, and yeah, this isn't like a get rich for free scheme. Next thing you'll need is an alarm clock, and this is going to get a little bit into like how we do what we do. But what I mean is, right, you got to be willing to wake up at 6 something in the morning, because at New York time, the New York Stock Exchange opens at 9:30 a.m. So in California time, that's 6:30 a.m. You got to be ready to go every day, because what we do here is that we look for an abnormal looking pattern at the opening of the market. And because at the opening of the market, that's the easiest way to predict what an abnormal pattern might do. Because as farther you get from 6:30 in the morning, who knows why the abnormal pattern is forming, and why, like why it would go up or why it would go down. You don't know. This isn't something like this method assumes you don't have a master's or a PhD in business finance, right? So just stick to the method. Anything after, I would say 7:15, you're just flipping coins, man. The bets become super binary. They could go up, they could go down. You could make money, but why would you do that with your money? So we look for an opening market. Yeah, we look for an opening pattern in the market. What am I saying? Well, we look for a pattern in market opening that would determine if this pattern is actually abnormal. Then like once you realize like, yeah, this is really abnormal, then you just wait for it. You just sit there and wait for that thing to start normalizing. So if it's too high up, it's going to come down. If it's too darn low, then it's going to come back up. Then once it starts normalizing, you just jump in, you jump out and make 1%, and you could jump in and jump out. And sometimes that 1% comes real fast. You're just in and out for 30 seconds, sometimes a little longer. Sometimes trying to figure out what it wants to do. And you're in it for what, 10 minutes. Now, like a really cool thing about this strategy is basically what it's not, right? So we don't spend hours and hours trading on the stock floor. We don't spend a lot of time analyzing. We're not like, this isn't for people who are formally educated. This is actually for people who don't have a ton of education in finance, but there's a way for them to make money. The other thing is that this isn't seasonal, right? So this method is like, it just works in bull markets, in bear markets. It doesn't matter. As long as the stock market is moving, there's ways to make money. And if you get on 6:30 in the morning and people are just holding on to their money, no one's making any movements, that's gonna mean people aren't gonna be making mistakes. And people aren't making mistakes and abnormal patterns don't form. You can't capitalize on those mistakes. But so how do you know what is or isn't normal, what or isn't like a mistake? Well, first and foremost, we only deal with S&P 500 companies. Those are the most normal, right? Like you start going into penny stock land, who knows why they go up or down, in a day? Who knows, right? Like, are you going to spend time researching? You can spend 2 weeks researching some penny stock? No, you are not. Okay, right? This is the in and out, like just 10 minutes a day kind of thing playing. Then I go look for the biggest movers, up or down. It don't matter. The best website for that, I find right now, I go on CNBC.com, go to their market movers, and they just show you like right away who's doing up, who's doing down. If somebody takes the top spot, they shuffle them around for you. Someone takes the lower spot, they shuffle those, and it's perfect. And they're always refreshing. Then once I find something that, hey, this looks pretty dang abnormal, I determine the believability of it. And there's three key criteria that you can look at with the Robinhood app. And they'll just show you everything. So everything's on Robinhood. At this point, like I'm gonna show you guys some screenshots from the Robinhood app, and they'll show you the long-term trends, the news reports, the quarter reports. They'll also show you this thing called the analyst rating. I don't really know what that has to. I don't know if that's a good key or not, but it is something to look at. So let's say you open up the Robinhood app, you kind of know something about IBM, so you type it in, and they're going to show you the ticker price, the percentage up or down that day. The ticker is going to be moving, and what you're actually looking for is a ticker that moves like at a consistent pace. You want something that's kind of moving and like showing you if it's going up or down. What you don't want is a volatile ticker that like doesn't really move, and then boom, big movement up, and then doesn't really move again, and then big movement down, right? Like that would be really hard to predict. At that point, it's just like, well, where's it gonna go? Who knows? It's hard to say because the ticker is just not telling you what's happening. So what you want to look in this ticker is, you want to see the price, but you also want to see movement, lots of it. Lots of little movement is the best. So let's say you open up the app, you look at IBM, they're kind of down. Now I know it said up there that this was down like 3.5%, but let's just pretend that this is down like 8%. You're like, oh man, what's going on? That's 8% down. That's kind of weird, and it's kind of coming back up. All right, well, what's going on? Like, so you're gonna look at the long-term trend. Like, well, first things first, you gotta look, probably the more important one is look at the week. What have they been doing all week? Oh shoot, well, it looks like here in this week, actually in this example, they were up really high and they came back. And so this is just kind of normalization. So this actually isn't that believable. because it's coming back to a kind of a flat rate. So you check that out. You'll look where the graph went for the last 7 days. Then you'll probably check out like the month, the log graph, and the 3 month and the 1 year, just to double check you know what you're seeing. But you also go all the way to the 5-year gap, and you'll look. It's like, what have these guys been doing? Oh, IBM, they do what, 11% 5 years. That's what, like barely 2%, more than 2% in 5 years. And look at here, somehow they've moved 8% in 8 minutes. Does that seem believable? Not really. It doesn't pass the test. Doesn't pass the smell test. But maybe there's some things you don't know. So maybe you can scroll down on the Robinhood app and you can check out the other keys release. You check out the news. Say what's going on in the news and things you're looking for. Just anything that might like kind of move the stock. So maybe there was like a bunch of layoffs. Maybe the CEO got fired or did something illegal or he died in a plane crash. Maybe the company lost a major lawsuit, or who knows, maybe they won a major lawsuit. Maybe they have patented a new tech. Maybe one of their competitors closed. Who knows? But what you want to do is check out the news. Check. Does it agree with the stock line graph, or does it disagree with it? And you can kind of just give a little believability in your rating, a believability rating in your head. If there's no news and there's a big movement and Robinhood's not showing you anything, maybe it's because the company is just a little obscure. So I would do your due diligence and just Google it real quick. And that, just take a few seconds, even though this game comes down to seconds. But, do your due diligence, check it out, see if there's anything on Google or whatever you want to do, Bing, DuckDuckGo, and, see if there's anything in the news related to that company. Lastly, Robinhood will show you the quarterly reports. You just want to check those out. You want to see, hey, did they make money? Did they lose money? Did they make more than they expected? Did they make less than expected? And you can see here, they kind of show you the last few quarters. They're showing you the next time they're going to expect another quarter report. This next one's going to be April 19th. And so you're just trying to check, will these affect the way people are thinking about a certain stock? So, and it's good to know, and so if they were crushing it in a quarter and the stock's bombing, okay, that's pretty unbelievable. Or maybe they did pretty bad in the stock, but maybe they lost money or they didn't meet expectations, but stock's going way up. Well, that's weird. Well, that's really unbelievable. So last and least, analyst rating. I just don't know. Robinhood shows it. It's something to look at. To me, they're just, I don't know if they affect the plays of the game. Do they affect the day-to-day? I don't know. It's going to have some effects over time, but really these analyst ratings are analysts who are like, hey, if you want to get in this company for the next year or 2 or 5, here's what I would say: buy, hold, or sell. And so what this IBM, there were 16 analysts, and 3 of them said, yeah, just go ahead and buy, and the rest said, hold on, and a couple guys said sell. I don't know how much that affects things, but it could affect something, especially if you give something a really low believability rating, but the analysts are like, nah, it's it's fine by us. So it's something to check out, maybe something you missed. But yeah, you want to determine something quickly, yes or no. Does this abnormal pattern, does it really fit? And once you come up with a yes, then you can decide, maybe I'll move on to another stock that's going to fit a little bit more. Or if that's the only stock, you could just watch and wait. But if it's definitely a no, watch and wait. Wait for that sucker to start normalizing and then jump on in. So now this last part is the path to making $1,000 a day. If you're still with me, this part's going to take a little bit, but you can make $1,000 a day just using this method by three things. Going slow, you got to get $25,000. I know. And you got to stick to the rules. But to be fair, $1,000 a day is the beginning of this, right? Like you can take this and just scale it up. But what do I mean by starting slow? I mean, start with small trades or imaginary paper trades. A lot of people I know use Webull for their paper trading, and just like feel what it's like to use this method to get a few wins, get like 5 wins before anything else. Then, like, hey, I can make money on this theoretically. Let me see if I can't do this in real life. So take, scrimp and save, get yourself $2,000 and use this method to try to get $20 wins. And that's why I really like this method, right? Like you can win 1%, but really the most you can lose is like 2, maybe 3%, depending on your risk level. But you can't lose that much. You can't lose everything in one day. So what you're looking to do is you're trying to get some $20 wins, and you're trying not to get anything more than a $40 loss. And you really want to, before you scale up, you really want to get about 5 1% wins in a row and know what that's like. And the beautiful thing is, like, why I say practice is the beautiful thing about this method is that it scales. It scales. It goes all the way up. What you do at the $2,000 level, you could do at the $200,000 level. If you could do it low, you could do it high. If you can't do it low, hey, maybe this method isn't for you. But don't rush this. Practice, and scrimp and save, get yourself 25K. Why do I say 25K? Well, once you have 25K, most brokers will be like, oh, they give you these golden big boy pants, and they're like, okay, you get unlimited trades. Whereas everybody else who doesn't have 25K, they're going to give you like 5 trades a week, which is 5 ins, 5 outs. But if you have 25K, they're going to label you a pattern day trader and give you unlimited trades. Some people don't like that label. They think it's, there's some negative consequences. There's not a lot of benefits, they would say. But to me, I think, unlimited trades is worth the benefit. There is a responsibility. You can't really have anything lower than 25,000 in your account. So just be mindful. Maybe you want to start, before you start doing your big trades, you maybe want a little bit of a buffer in case your first 2 trades aren't very good. And finally, here's where the key is in. They give you leverage. Sometimes that's 2 times, 3 times, 4 times the buying power that you would normally have. So when I say, some days I just make $1,000 that day in 10 minutes. What I'm doing is I'm walking into IBM or whoever. I'm bringing $25,000 of my own money. I'm bringing $75,000 of E-Trade money that I borrowed on an 8-hour loan. I'm buying $100,000 worth of stock, and then I'm trying to turn around and sell it for $101,000. Right? I'm just trying to get 1%. Once I sold it, I pay back the $75,000 and I pocket the other $1,000. And my plan right now is scrimp and save till I get to about $100,000. Because then I'm playing at the $400,000 level. So I walk in, I walk out, 1%. What's that? $4,000. How many times do you need to do that a month? To pay your bills. 2, 3 times. And like to get 1%, that's pretty easy. So like that's the plan, that's the goal, and I think anybody can do this. They can go from 25 to 100,000 to $400,000, right? If you stick to the rules. I'm learning some rules, and I'm learning them in very difficult ways. I'm not gonna lie. I've lost money. Last year I lost more money than I made. But this year I gained it all back and then some. And now I'm flying pretty good. But I've wrote these rules down, not just for you guys, but I wrote them down for myself. I mean, it's no lie. Like 99% of pattern day traders don't last a year. And I think it's because they don't have rules for themselves. I mean, you can look at these rules, maybe just come up with your own. Just 2 rules. Don't take risks. Don't gamble, right? This is gonna, right? Stock market, super emotional. You're gonna have emotional highs, emotional lows, and you're gonna want to make plays based on your emotions instead of plays based on the method. Okay, well, you can't be doing that, forever, right? Like that's just, even if you're winning on your, that's not gonna be a long-lasting solution. So I've come up with 6 rules. 1, avoid volatile stocks, right? Because volatile stocks, if they do something that looks abnormal, who knows? Maybe that's normal for a volatile stock. You don't know. So just stay far away from those crazy stocks. A lot of times they're just ones that are really popular household names currently right now. Tesla, Netflix, pretty much actually anything to do with electric cars. Those stocks are really volatile. People just go nuts for them. And sometimes they're way up, sometimes they're way down. Just stay away. You just don't know what it's going to do, 2 and 3, you don't owe anyone your money, and no one owes you their money. Like these kind of, just remember that. Like so, you're looking at a stock, the pattern's showing up, it's too high or it's too low. You're like, okay, and it's not very believable. All right, you're waiting to get in this. Don't go in right away, right? Don't be the first. You don't owe them your money, right? You don't have to hand over your money if they're not going to do what you think they're going to do, right? If they're not going to behave, don't give them money. And let's, and to be fair, they don't owe you their money, right? They're just going to do what they do. And 9 times out of 10, you get in, it's going to go, like, once it starts moving in the way you think it's going to move, it's just going to move that way. 9 times out of 10. Sometimes it's going to flatline. Right, and it's okay to cut. Right, they don't owe you anything, so just cut. Right, and move on. Right, avoid making bets from behind. It's okay to lose one day. Let's say it just kind of goes belly up. Hey, you know what? There's always tomorrow. Right, you got to be completely unemotional. You are the house, and everybody else is the casino customers. You don't care. You're sticking to your method. But make sure you learn the difference between why you lost. Was it you causing the loss or the market causing the loss before you start playing at the $100,000 level? 5, keep your money moving. There's always another stock and maybe another one in the same day, right? So don't get stuck on one thing. Keep moving, get your 1%, get out. Come back later for something else. 20 minutes, there might be 2 or 3 stocks doing something. And 6, keep a journal, right? And be brutally honest in that journal, right? Record all your wins, record all your losses, and record why. What were you thinking, right? What'd you do? What'd you do differently than the other days? Where was your emotions at? You got to be really brutally honest, because if you're not, you say you start losing, you get on a losing streak, and that's going to affect your decisions the next day and the next day, especially if you don't check in. If you don't say, hey, how am I feeling today? Am I feeling emotional? Maybe I lost $1,000 and I'm trying to get revenge. Keep a journal. So go slow, guys. Stick to the method. I'm pretty sure everybody can do this. This is what we do. We just look for the abnormal trends. We wait for them to go to normal and capitalize on it. Test out my strategy, guys. Use imaginary stocks, paper stocks. Then go up to the $20, go up, try to win $20. I know I left a lot out. I know you guys are gonna have some questions. So leave your questions in the comments. I'll see you guys when I have some updates on how my path is going.